Hello guys. I don't know if anybody is hearing me. Yeah, I believe that you guys are hearing me. Okay, welcome to my streaming. So I'll be educating you guys on how to I'll be teaching you guys how to trade, okay? How to trade, and I'll be teaching you guys my strategy, the strategy I use when it comes to trading. And over the course of my streaming, I'll be sharing the whole process of how I trade and everything that involves my strategy and how I get my trades and how I trade. I'll also be teaching you guys how to place trade. Okay, using the Gate platform. Using the Gate platform, I'll be teaching you guys how to okay how to place trades. Okay, and lot of stuff. So stay tuned, and it's going to be a lot of information for you to learn from. Okay, so today we'll be talking about crypto price action. Okay, so we'll be talking about price action. So price action, we'll be looking into market structure. Okay, how to read market structure. Okay, price action in simple terms. Okay, price action in simple terms um is just price movement. Price movement in the simplest form for you to understand it is just price movement. Okay, um and the price movement is price price moving up and down. Okay, price moving up and down. Let me open the chart so you guys will be understanding me properly. Okay, so we are opening the chart and we are opening BTC chart. Okay, so this is BTC chart, and what you are seeing now is what you call price action, the movement of this market. Okay, the movement of this market is what you call price action. Okay, this movement you are seeing here, the way the price is, the action of the price, the up and down movement that the price is doing, like this, going up and going down, going up again and going down. So all this thing is what we call price action. Okay, and today we'll be learning how to read this price action. So that's what brings us to market structure. Okay, market structure. Okay, now for a start, we have basic stuffs that you need to know when it comes to marking out market structure, when it comes to reading market structure. There are simple stuffs you have to know. Okay, we have what we call trends and ranging markets. Okay, first thing you have to know, trends and ranging markets. So what we mean by trend is markets going in a particular direction. Okay, either uptrend or downtrend. So we have two types of trend, uptrend and downtrend. Two types of trend. Take note of that. Uptrend and downtrend. Okay, uptrend and downtrend. Now, um, what is an uptrend? Let's start with uptrend. Uptrend is when market is creating highs and lows, highs and lows. Okay, highs and lows. That's what you call an uptrend. So yeah, we have sorry. So we have this guy as our high. Is that guy? Okay. So we have here as a high and here as a low. Okay. Here as a high and here as a low. Here as a high and here as a low. So this is what we mean by market creating higher highs and higher lows, higher highs and higher lows. So that's when you know that you are in an uptrend. An uptrend is when the market is creating higher highs and higher lows, higher highs and higher lows. Okay, so um there we now have a downtrend. This is an uptrend, then we now have a downtrend. Okay, so downtrend is when market is creating series of lower highs and lower lows, lower highs and lower lows, lower high, lower low, lower high, lower low. Okay, this is when you call this is when you say that market is in a downtrend, when you create series of lower highs and lower low. Okay, we have a lower high there, we have a lower low, we have a lower high there, sorry, we have a lower high here, lower low. Okay, this is supposed to be a lower high for this, lower low, lower high for this, lower low. Okay, lower high, lower low, lower high, lower low. Okay, this thing that is printing the market, this is when you, if you see series of lower highs and lower lows, that's where you say, okay, wow, market is now in a downtrend. Remember, we have two types of trends, an uptrend and a downtrend. This is an uptrend and this is a downtrend. Uptrend and downtrend. Okay, these are the two type of trends you'll be seeing in the market. These are the two type of trends you'll be seeing in the market. Okay, let's calm down. Now I remember we have a trending market and a ranging market, a trending market and a ranging market. So let's look into a ranging market. What's a ranging market? A ranging market is when market does not have a particular direction. When I mean particular direction, I mean when market is not moving either up to the upside or to the downside. Is when market is not moving either to the upside or to the downside. Okay, when market is not doing any of these two things, that's when you know that market is ranging. And when market is ranging, it's just going in a sideways direction. So when market is doing something like this, it's not picking any direction, it's just moving in a sideways direction. That's when you say that market is ranging. Okay, that's when you say that market is ranging. Okay, you just have only highs and lows, like no particular direction. It's not picking a particular, you just have highs and you just have lows. So this it is showing that market is going in a sideways direction. That's when you say that market is ranging. Okay, and uh, with the system we are trading, with the system that we are going to be learning how to trade with, when the market is ranging, like we don't do anything. Okay, when market is ranging, we don't do anything. But for the trending markets, when the market is moving to the upside, like when the market is trending up, which is in an uptrend, when market is in an uptrend, what you have to be doing is to be buying. When market is in a downtrend, what you are going to be doing is to be selling. Okay, you know there are many ways to make money in the crypto market. Okay, there are many ways to make money in the crypto market. You can do staking, you can do mining, you can do spot trading, you can buy, you can do long-term investment, a lot of things. And you can also trade futures. Now when it comes to futures, trading futures, this is what you are going to be doing when we are trading futures. Okay, we are going to be buying and selling. Our main job is to be buying and selling. So for you to do that, you have to know where to buy from and where to sell from, where to buy from and where to sell from. Okay, now so let's look into uptrend. Okay, let's look into uptrend so that you understand why this is called an uptrend, and you understand why we have higher highs and higher lows in an uptrend. Okay, now let's watch this. Market started moving up. Okay, and when it was moving up, it took a break and started going down. Okay, now I want you to also understand this. Market has, why market forms higher highs and higher lows is because market works in a breathing pattern. Like it breathes in and breathes out, it breathes in and breathes out, it breathes in and breathes out. Okay, this is how market works. Like it's just like you um traveling to a far distance. Okay, let's take for instance, you are traveling to a far distance and you are traveling by land. Okay, in the course of traveling, you are going to be resting. Like let's take for instance, you took off from a point. Okay, let's say you are going, okay, let's use a better scenario here. There is this guy. let's say you are, this is where you are at now. This point is where you are at now, and you are going somewhere here. You are going somewhere here, okay? And this, like, let's not exaggerate. Let's say this is like 10,000 kilometers apart, okay? And in a journey of 10,000 kilometers, you are going to be resting at some point. You are not, even if you are using a car, at some point you are going to rest your car so that put fuel, do all those stuff, ease yourself, stretch yourself, and all those stuff. So let's take for instance, you've started the journey from here. If you go from this point to a point, you have to rest, okay? You have to rest. So all these resting points, you continue your journey again, you rest, continue again, you rest, continue again, till you get to this final destination, okay? This is what you are going to be doing. You are going to be taking breaks, okay? So all these things are what market also does, okay? For market to start from a point and get to another point, it has to rest. And all this resting, it has to get stop, retrace back, like take drinks, like refresh, and before start going again. So that's why, so those processes is what you now identify as highs and lows, okay? Now markets took off from here, it stopped, took a rest. Now it created a high, okay? This is the first high, okay? It's created a high here. So we are going to call this guy a high. Okay, he created the first high. He created a high. Okay, we have a high there. Now it was done resting and started going up again, okay? Now this, when it stopped here, it created a low. This is where we now identify as our low, okay? It created a low here, a low, okay? It created a low. Now it's now started moving up again, okay? It now started moving up again, and then moved above this previous high here, okay? It moved above this previous high here and started coming back again. What did it do? It's created another high, but this, there is already a high here, okay? And this new high that is created, stay with me, this new high that is created here, okay, is higher than this previous, high, okay? That's why we now say that okay, that's when we now say that this new high that has been created here is higher than this previous high. That's where the term higher high, because this high is higher than the previous high, okay? Higher high. So we now identify here as our what? Higher high. That's our higher high, okay? And you can abbreviate it as HH. Sorry, let's use capital H, okay? Which is HH, like stands for higher high, okay? This is a higher high, which can be abbreviated as HH. Now when it made that movement after reaching to this point and was resting, like breathing in again, it stopped breathing and continued going to the upside. Now it's created another low here. Remember, this is now a new low here. We have a new low here, okay? Now created a new low here. Now this low that is here, this new low that is created, is lower than the previous, is higher than the previous low, okay? This low here is higher than the previous low. That's where the term came, a higher low, a higher low, because this new low now is higher than this previous low. Okay, so that's why we call here a higher low. Now we annotate this. Okay, this is where we now call a, so now we now notate here as, sorry, a higher low, and we use HL to notify the higher low. Okay, so next time I might not be putting it in full like this. We now be calling it, what's wrong? So we will now be calling it HL as in higher low. Okay, so the same thing continues. This high is now created a new high. This new high is higher than this new high created here. Okay, this new high created here, this new high created here is higher than this previous high. That's where the term came, higher high, another higher high. So the more it continues going up, the more it is higher than the previous one. And also the same thing applied here on the lower side. It's created a new lower high. Okay, that's it. That's what it continues doing. Okay, this is what market is going to be doing as long as we are in an uptrend. As long as we are in an uptrend, this is what you are going to be seeing: series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Okay, this one uptrend. Now let's go for a downtrend. Okay, let's see the downtrend side of things. Okay, now we have, remember the analogy I gave you about traveling. Okay, remember the analogy I gave you about traveling. You started from a point and all that, so the same thing applies here. Let's say you have reached your destination and you are now coming back, so you are also going to be resting on the road. So we started the movement. Okay, now we started movement, rested, okay, and refueled. So that process of resting created a low here, okay. At this point we had a low here, created a low, so we annotate it as our low. So that's our low. Okay, we now had a low, and after the rest we continued our journey. Okay, hence we created we created a high. So after the rest we created a high, here, so we call it a high. So we call it a high. Okay, we call it a high. Yeah, now after the rest we broke this new low, this previous low, and created a new low. Okay, we broke this new low and created a new low. Now this new low that we created here, this new low that was created here is lower than this previous low. Okay, this new low is lower than this previous low, hence we have the term lower low. So this is a lower low because it is previous than the because it's lower than the previous low. So we have lower low, and we call it LO, lower low. That's the abbreviation we are going to be using. Sorry, lower low. Okay, now we call it this a lower low. Now we now have we now started going back again. Okay, we rested and then continued going to the downside. Now we created a new what? A new high. We created a new high here. We created a new high. So this new high, remember, this new high is lower than this previous high. Okay, this new high now is lower than this previous high. That's why we now call this one a lower high. This new high is now lower, is this previous high, sorry, is higher than this previous sorry, this new high is lower than this previous high. Okay, that's why we now call it a lower high, because it is lower than the previous high. Okay, lower high, and we will call this LOH, lower high. Okay, so this is a lower high. Let's keep it here. Okay, the same thing continues happening. This low is lower than this previous low, so these are new lower low and these are new lower high. The same process, lower low, lower high. Okay, so I hope you now understand why we call this lower highs and lower lows. So these are the terms you are going to be using when marking out our market structure. Okay, this is the way market behaves. Okay, this is the way market behaves. It's going to be creating highs and lows in an uptrend. Remember, we have uptrend and downtrend. We have what? Uptrend and downtrend. We have what? Uptrend and downtrend. Again, uptrend and downtrend. And in an uptrend, we are going to be seeing series of higher highs, higher highs, higher highs and higher lows, higher highs and higher lows, series of higher highs, and higher lows, higher highs and higher lows, higher highs and higher lows. While in a downtrend, we are going to be seeing series of lower low and lower high, lower low and lower high, lower lows and lower highs. Okay, this is what you are going to be seeing. So now let's go to a ranging market. Okay, ranging market is not that important to us, but we are still going to talk about it. Okay, this is a ranging market. So market is a market that is just going sideways. Okay, and why is this market going sideways? Okay, because there is a presence of what you call support and resistance. Okay, it's just hitting support and resistance levels. That's why it's not taking any direction. Okay, it's just hitting support and resistance levels. Okay, it's just hitting series of support and resistance levels, and that's why it's going to a sideways. So until it breaks this support level or resistance level, that's when it starts taking a direction. Okay, so we are not interested in this guy. Okay, but you need to know what it is, and if you see it in the market, you avoid it, you just leave it, you don't do anything. Okay, what you are focused on is trending markets. Okay, trending markets. Now let's go to the chart and see a chart example of what you have been talking about. Chart example of what you are talking about. Okay, this is a daily chart. So this is a 1 hour chart. As you can see here, that's a 1 hour chart. That's a 1 hour chart over there. Okay, over there, that's a 1 hour chart. And you can see 4 hour chart, you can see daily charts. Okay, that's what you call time frame. So we are still getting out all of this. We talk about all of this now. If you can see clearly here, you can see that this market right here, from this point, yeah, from this point to this point, it was in an uptrend. Are you seeing? It was just moving to the upside. It was in an uptrend. Okay, now let's look for a downtrend so that you can see. Okay, it was in an uptrend, very good uptrend. And if you see here, let's talk. Okay, and if you look at this point, if you look at from this point to this point, you can see that it was in a downtrend. It was declining to the downside. Okay, very good. So this is what you call a downtrend. Are you seeing that downward movement? Let me put this guy. Okay, are you seeing that downward movement? Are you seeing that downward movement? A downtrend. Okay. Now, look at this guy. You see that this guy is just moving sideways. This is a ranging market. See, it's just moving sideways. It's not picking any direction. Support and resistance. Are you seeing? Until markets broke out this guy and started moving to the upside. Okay. So this is a ranging market. You can see this guy is just a ranging market because it is moving sideways. There is no particular direction. And here we have an uptrend. Are you seeing? Are you seeing? Very simple. Very, very simple. So let's now look into why we consider these guys an uptrend and also why we consider this guy a downtrend. Okay. And why we consider this guy a downtrend. Okay. Let's now look into that. Let's start with the downtrend. Okay. What are you seeing in a downtrend? Remember, in our downtrend analogy, what you are going to be seeing is higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Okay. Sorry, lower highs and lower lows, lower highs and lower lows. Okay, that's what you are going to be seeing. And if you look at this guy clearly, you will see that market created a high here. Okay, first of all, market created a low here. Okay, this was a low and broke the low. Okay, and this was the high. When market created this low, it went up. Okay, give us that high, went down. Okay, it went down, give us a lower low. Here is now our lower low. Why? Because this previous low, this low now is lower than this previous low. Okay, give us a high. This is our high, and here is now our higher high, because our lower high, because this high here, this new high is lower than the previous high. Okay, it came again, broke structure. Okay, broke structure and gave us a lower low. Sorry, why? Because this previous low is lower than this recent low. Put back again. Okay, um created a high. Okay, created a high and boom, broke structure here. Okay, and yeah, broke structure here. Okay, created a new low, moved back again, a new high. Okay, are you seeing? What are we seeing here? So what are we seeing here? What are you seeing here? A series of what? Highs, lower low, lower high, lower high, lower low, lower high, lower low, lower high. Are you seeing? Series of lower highs and lower lows. Okay, very simple. Lower low. Okay. Okay. Now that's it for this downtrend. Are you seeing why this guy is a downtrend? Very simple. Okay. Let me confirm if this guy is still streaming, please. Okay. The thing is going. Okay. Sorry. Okay, back to what we are doing. Okay, sharp. Are you seeing that? This is why this is called a downtrend. Are you seeing what is doing? Highs and lows, going to the downside. Okay. Now we had here as what, ranging markets. Okay, okay, okay. Here, this was also a downtrend. Sorry. Okay, this guy also moved to the downside here. It broke structure. Okay, this a lower high, and this a lower low. Okay, very good. Okay, now let's look at this uptrend. After this guy broke under structure, yeah, and started moving to the upside. Okay, um I know you guys will be asking which one is break of structure. Okay, I'm just trying to show you guys how the trend works. Then we now look into why this is called a lower low. Okay, like what validates this lower high here now that you are seeing. What makes it a lower high? Like what validates it, and why is it, like what validates it to be a lower high? Okay, and what are you going to see to know that this guy is now a lower high, and this guy is a lower low? Okay, this is the next thing you are going to looking into now. So let's just identify those highs and lows for now. Okay, then we look into the other part. Now we now have this is an uptrend. Okay, and why is this guy called an uptrend? Because we have series of this now a high. Okay, sorry, you see the high here. This now a high, right? Sorry. Okay, so let's look into this guy closely so that we understand what is happening here. Now this a high, this is a low, this is a high, this is a high, this is a low. So now looking back at what we know before now. Looking back at what we know before now, you see that this guy was this guy down here was our low, and it created the high. Okay, and this guy is our high. This guy was our low, and this guy was our high. And as you can see, right here, that we now had a new high here, which is this high is higher than this previous high, and we had a new low here, which shows that this new low, sorry, is higher than this previous low, which is our our higher low, and this our low, and this our higher low, this our low, and this our higher low. Okay, sharp. I hope you understand what I'm doing. Hope you guys are understanding what you are doing. Okay, that's very nice. Okay, now after that happened, let's zoom in very well so that you can be seeing very well. After that happened, we now had another break here, and we now had a new high, which is our new higher high. Why? Because it's higher than this previous high, and we had our new low here, which is our new lower high. Why? Because this low is higher than this previous low. Okay, we have our new another high here, which is our new higher high, and this guy is our new what, higher low. Okay, another high, new higher high. Okay, new higher high, new higher high. You had a new low, new higher low, high. Okay, we had our new high here. Are you seeing that why it's called an uptrend? Why? Because you are seeing series of, are you seeing that uptrend movement? Are you seeing it? Let me use this tool so that you see it very well. Are you seeing it? Those highs. Are you seeing that is clearly an uptrend? Is moving to the upside. Okay. Sharp. Okay. Here was a downtrend and here was an uptrend. Okay. If you still go to the back, like if you still move to the backside, you can screenshot this if you want. You can screenshot it. Okay. So if you go back, you see that this is what market is doing. Series of, I seen the this uptrend. This guy is an uptrend. I seen uptrend, uptrend. I guess. Yeah. So yeah, it's like he ranged there. Yes. See, is that a perfect example of a ranging market? Yes. Are you seeing? It was just high. I see no direction till it broke this guy and started moving to the downside. I see. Very simple. So when market is doing something like this, what you have to do, you just have to avoid it and wait for the market to start trending, to start creating uh, higher highs and higher lows for you, and lower highs and lower lows for you to start determining how to trade it. Okay. Remember, what you are going to be doing is to be buying and selling. You're going to be buying and selling, but then you have to understand the market structure. Okay. I see this one is an uptrend. You can see the highs and lows and all that. The This guy was broken, yes. So I seen those highs and I seen clearly uptrend. Okay, very simple. So I would like you guys to go to your own chat after the streaming and practice this stuff you are seeing. So if you zoom in very clearly here, you can see a downtrend here. A downtrend here. You can also see an uptrend here. You can also see a downtrend here. I see. It's everywhere uptrend. Just zoom out, you'll be seeing them downtrend. I see. Okay. Uptrend. Like any time frame, even if you switch to the 4 hour time frame. Okay. Even if you switch to the 4 hour time frame, as you can see that 4 hour time frame over there. So even if you switch to the 4 hour time frame, you see that it's the same thing. Series of uptrends right here. Yeah. Right from here, it was trending very like a crazy uptrend. I seen it. Crazy uptrend right here. It's ranged here, if you can see. It's ranged here a little bit. Then started taking a direction and boom, you can see another uptrend. Series of highs and lows. It's ranged here. I seen that ranging. Moved to the downside. Created a downtrend here. Another uptrend. I see another uptrend. Okay, it's trended up there. Moved kind of sideways here, I think. I will consider this guy ranging market. Ranged a little bit here. I see started trending up again. I'm sorry. Started trending up again. Okay. This kind of ranging here, which okay, it trended down to the downside. Because if you can see series of highs and lows. another uptrend. Like I see, it's just very simple. This is what market is doing. Downtrend, uptrend, downtrend, uptrend, downtrend, uptrend, like downtrend, uptrend, downtrend, uptrend range, downtrend, uptrend range. Okay, this is what market is going to be doing all the time. Okay, this is another uptrend. This a down. This is the crash that happened the other day. Okay, like this is very crazy and very simple. Are you seeing what the market is doing? It will range, it will go to an uptrend, it will go to a downtrend. Like this, the three things market is going to be doing is either it's trending to the upside or ranging. Is either it's trending, is either it's trending to the upside or it is ranging, or it is trending to the upside again, or it is down, is trending to the downside. Like these the three things you are going to be seeing. Nothing other than this. This is the three things you are going to be seeing. Okay, that being said, just go to your this thing and and practice, like practice it until it becomes part of you, and you see, like, you open your chart. Okay, let's do something else. Then okay, let's do something else. Let's okay. Okay, now let's move to the next stuff you have in hand. So then, I told you that market does this. Okay, market does this. Now we now have other things that are attached to this. So we now have what you call break of structure, and I told you guys I want to show you guys how to know when a high and a low is valid, like when a higher high is valid or when a higher low is valid. Okay, now let's say, okay, let's say market have not started all of this. Let's delete all of the whole chart. Okay, let's say market have not started all of this. Market just created a high here, now created a low. Okay, now if you look at this thing, you will say that, like, this makes no sense for the now. This movement you are seeing now makes no sense. It's just a V. Okay, it's just a V. Okay, let me make it a V, like a total V. Okay, this is just a V, sorry, an A shape. Okay, this is just an A shape. We don't know anything, this what this is what this thing is now yet. We don't know if market is going to the upside or is going to the downside, or it is about to start ranging. Okay, so when you see this stuff, market does something like this, you have a lot of questions going to be coming into your head, like what the market is, what is the market about to do. Okay, now for you to know what the market is about to do, and for you to determine if this is a higher low or a lower low, or if this is going to be an uptrend or a downtrend, what do you have to, there are a few things you have to start putting in place. Okay, now you now have to wait for what you call a break of structure. You now have to wait for what you call a break of structure. This is where a break of structure comes in. Okay, you now have to wait for what you call a break of structure. Okay, is when markets break structure to a particular direction. That's when you now know what uh, what market is about to do. So a break of structure, we are going to be calling it BOS. Okay, break of structure, abbreviation BOS. So some of you guys might have been familiar with this word BOS. Okay, so what is BOS? What is a break of structure? Let's start with that. What's a break of structure? A break of structure is when market breaks a high or a low in the market. When market breaks a high or a low in the market, we have this. Okay, we have this, and we have this. Okay. The Sorry. We have this guy. I'm coming. I want to annotate another thing. Yeah, yeah. And we have this guy. Okay, these two guys here now. So I will use these guys to explain what a break of structure is. I said a break of structure is when a market breaks a high or a low in the market. Break of structure is when market breaks a high or low in the market. Okay. Now, looking at this guy, we know that market has created a high here at this point. We know that this is a high. Okay, market has created this high. Okay, and when market breaks, sorry, now this high, now when market breaks, when market after breathing in and wants to breathe out, when market breaks this high now, when market moves and breaks it, that's what you call break of structure. Okay, when market breaks this high, that's what you call a break of structure. When market breaks this high, that's what you call a break of structure. So we use a line to identify a break of structure. Are you seeing? Okay. Let me use so when market breaks this line, that's when we say this is a break of structure. Okay, break of structure. Let me change the color of this red, and let's add a text to it. Okay, let's add a text to it. BOS. BOS. Okay, let's make it center middle. Okay, let's reduce it first. Let's make it, yeah, let's do it like this. Okay, so this is now a break of structure. So remember, in this analogy, you don't know what market is about to do here. Okay, you don't know what market is about to do here, but once this guy, they are looking at this guy, you don't know what market wants to do here. But when market now breaks this high you are seeing here, when market now breaks this high, you now say, okay, we have a break of structure. Now we now have a break of structure, and once market has broken this structure, that's when we now confirm that here is a low, that below here is a low. If market does not break this structure, this high here, if market does not break this high here, we don't know if this is a low. Okay, yet is when it breaks this high, that's when we now consider here a low. We now be like, okay, we now have a low. Okay, we now have a low. Now watch this. It has broken this high here, okay, and created a low. That's when we now say, okay, this is a low, because if you look at the chart, okay, I'm coming. We'll still get to that. Now it has broken this high, which is now our break of structure. Okay, and we have confirmed that this is a high and this is a low. Now it now went up again and created a new high, which is, it has started breathing in. Now. Okay, it has started breathing in, and now we now have what here? A high here. So we mark it out as a high. We now have a high here. Okay, we now have a high here. And now what are we going to do? We are going to be expecting a break of structure to confirm that, okay, we are now entering in an uptrend. Okay, now remember, an uptrend is series of what? Higher highs. Okay, so let's mark it out here. An uptrend is a series of higher highs and higher lows. Okay, now this is how we now know when market is about to be doing, like when market is creating this high hazard, high low. This is how the market is going to be doing all this too, and when to identify when market is an uptrend and in a downtrend. What you are doing here is our ability to know when market is going to the upside. Okay, for us to buy a market, okay, for us to buy a market, like for us to enter a trade, like a buy trade, we have to know what the market is about to do. Okay, that's what trading involves. Like you being able to use the past data that you have in the market to predict what is going to be happening next. Okay, that your ability to predict what is happening next is what you call the trading. That's the trade you have been, yeah, that's what is trading. Okay, so for you to buy, I told you in an uptrend what you are going to be doing is buying. So for you to buy in this uptrend, okay, your ability to know when market is about to start buying, that's what you are going to be learning. Okay, not now, but we are still in the process of knowing how to identify when to buy and now position yourself to buy. Okay, let's leave it like that. Now, um the market has created our high, so what are we anticipating now? Okay, it's like market is about to start trending to the upside. Okay, we'll be anticipating what? A break of structure, which involves the break of this high. So let's make a copy of it. So we now position this guy here. Okay, let's shift this guy. Now we are now anticipating this high to be broken, because in an uptrend what you are going to be seeing is that the highs are going to be breaking. Like market is going to be breaking highs, and the lows are going to be protected. Okay, and the lows are going to be protected. Like in an uptrend what you are expecting is market to be taking out the highs, to be breaking the highs and be going, breaking the highs and be going, and not to be breaking the lows. Okay, that's what you are going to be anticipating. So now we are anticipating market to break this high to confirm this low. Okay, now market breaks this high. Once market break this high, we have confirmed that we are in an uptrend. Wow, very simple. We have confirmed what? That we are now in an uptrend. We have confirmed that we are now in an uptrend. Very simple. So what are we going to be expecting? What are we going to do now? We are going to say, okay, since we have broken this structure, that means we have gotten our high and our low, and now we have gotten our higher high and our higher low. I see. Very simple. We have gotten our higher high and our higher low. That means we have said, okay, market is now in an uptrend. Okay, so what we are going to be expecting now is for market to create a new high and pull back, and then boom, we now anticipate a new break of structure. So when market pulls back, okay, when market pulls back, that's when we now buy from here and now make money. Okay, now I forgot to mention something. Now remember I told you that market moves in breathing pattern. Okay, so this breathing pattern now, what we call the resting point, like the breathe in, is being called a pullback or a correction. A pullback or a correction, you can write that down. A pullback or a correction, it has pumped up, it has moved up, and it is resting. This resting is called a pullback. Okay, or a correction. A pullback or a correction, a pullback or a correction, this movement back to the downside is called a pullback or a correction. So it has pulled back. Now after the pullback and it wants to breathe out again to break a structure, like to create a new high or create a new low. Okay, it's now this move up movement now after the pullback, okay, is now what you call a correction, sorry, a continuation. Okay, a continuation. It has continued going to the upside, which is continuing the uptrend that it has been doing before. Okay, now yeah, that's it. So that this movement now, this market movement now is in two phase, which is this now I just explained. Now I just skipped it. This is market is just moving in two phases. That continuation and pullback, continuation and pullback, continuation and pullback. So you have heard me said pullback, that's why it just came to my mind now. Okay, we have continuations and pullback, continuation, pullback, continuation, pullback, okay? Or some people call that pullback reversal, reversal, continuation, reversal. But I'll be using pullbacks. Okay, so anytime I use, you just know that this is what I'm talking about, okay? Yeah. Now, so after every pullback, there must be a continuation, okay? So far, say the market is an uptrend, okay? Now, we have started seeing series of higher highs and higher lows, higher highs and higher lows, okay? We now have higher high, okay? Higher high over there, okay? We now have here lower, sorry, lower high. No, sorry, we are going to call it yellow edge, okay? Now have our lower high. So this is what market is going to be doing. So if you're anticipating break of structure, okay, sorry, let's just copy this guy. Okay, you anticipate another break of structure. Are you seeing it? And you'll be seeing market is just getting higher, and this is what it's going to be doing. Okay, break of structure, pullback, continuation, break of structure, pullback, continuation. Okay, it has breaking structure, it will pull back, and it will continue break another structure. So this is what is going to be happening in an uptrend till market is done moving in an uptrend. Okay, it will be breaking structure to the upside. Okay, remember, in an uptrend, just take this, put this thing down. In an uptrend, what we are expecting market to be breaking, like the break of structure you want to be happening, is for market to be taking out highs, like for market to be breaking out, for market to be breaking the higher highs. In an uptrend, we want market to be breaking what? Higher highs. Repeat after me. In an uptrend, we want market to be breaking the higher highs. In an uptrend, we want market to be breaking the higher highs. Okay, in an uptrend, we want market to be breaking the higher highs and not the lower lows. Okay, so and not the lower highs. We don't want market to be breaking the lower highs. We want it to be breaking the higher highs. Okay, in an uptrend. Okay, that's what we want. Now we are done with an uptrend. Now let's look at a downtrend. Okay, now this is a V shape. If market does something like this, you don't know if market wants to continue to the upside or to continue to you don't know if market wants to start going in an uptrend or in a downtrend. Okay, you don't know if market wants to start going in an uptrend or in a downtrend. What you know is that market is sorry, what you know now is that market is just here. It just formed a V shape. Okay, give me 1 minute, I'm coming. sorry guys, I was pressed. That was why I went to ease myself. Okay, sorry for that. Okay, now you don't know which direction the market wants to go. Okay, now the market now does something like this, and boom, breaks this low. You now say, okay, we now have a break of structure. That means market has taken out a low. Okay, that means market is likely going to be going to the downside. Okay, we now have market took out this low. Market took out this low, gave us a break of what? Structure. Gave us a break of structure. We now be like, okay, market has broken a low. That means we are in a downtrend. Okay, we are in a downtrend. Okay, if market breaks, in an uptrend, what you want to be, the break of structure you want to be seeing is the high is being broken. Okay, the high is being broken, and not the lows. But whereby we have broken a low, that means we have changed from an uptrend to a downtrend. Okay, we are no more in an uptrend. Now market has broken this low, which is here, and when it broke this low, it created a high. Okay, it broke this low and created a high. We now be like, okay, we have gotten our high. Okay, now what we now want to see is that the next, this new low that is being created, that it will be broken. That's what we are expecting now. Like we are going to be getting a break of structure of this new low that is created. Okay, for us to start seeing that you are in a downtrend. Okay, now market gave us that low, this low, and now pulled back. Okay, and now pulled back. Okay, you remember in an uptrend, this is the continuation, this is the pullback. But in a downtrend, this is the continuation, this is the pullback, continuation, pullback, continuation, pullback, continuation, pullback, continuation, pullback. Okay, this is what we've seen in a downtrend. But this, for in an uptrend, this is a continuation, pullback, continuation, pullback, continuation, pullback, continuation, pullback. Okay, that's it. So now in a downtrend, we have seen our continuation, and we have pulled back. Okay, so after the pullback, we are saying, okay, we are going to be anticipating a break of structure, or a break of this new low, which is now our lower low. Remember, there was a low here, and this new low is lower than this previous low. Okay, so this is our new low, this is our lower low. Okay, and we now have a high. So we want to confirm that this is a downtrend, and what you want to be seeing a downtrend is this is a low, is a lower high and a lower low, a lower high and a lower low. Okay, so we don't know what market is about to do yet. We don't know if it wants to just start ranging. Okay, it's just to start ranging and going sideways. Okay, so we need a break of this lower low to confirm that this is now a lower high, and we are now in a downtrend. Okay, so market, after pulling back, it continued the trend to the downside and broke this lower low here. Okay, we now have our break of structure. I know it's a lot of information to take in, but just after this stream, just go back and watch it again. You will understand what we are doing. Okay, so we have created a new high. Okay, we have created a new high, and now this high is lower than this previous high. Okay, this new high is lower than this previous high, so we now call it a what? A lower high, which we are going to be saying is our LOH. And here we have a lower low, which is a low that is previous than the previous low. That is lower than the previous low. So we now call this one a lower low. Okay, very simple. We now call this one a lower low, and this is what you are going to be seeing. So once market is done with the continuation and starts pulling back, that means we have seen our lower low. So we now have a new lower low. We now have a new lower low. So what are we going to be anticipating? What are you going to be anticipating? A break of structure. Okay, a break of structure to confirm our new lower high. Okay, so in a downtrend, what you want to be seeing is the lower lows to be breaking. You want market to be doing is to be breaking the lower lows. Okay, to be breaking the lower lows. But in an uptrend, what you want the market to be doing is to be breaking the higher highs. Okay, to be breaking the higher highs. Okay, now that is it. So we now have our break of structure. Like we are now anticipating a break of structure. So market will now break this low and give us um our new break of structure, our new high, and our new low. Okay, and our new low. Now, what do I say? I know some people might have a question in mind. Okay, if we go to the chart, I will still clear that question. So now, why do we wait for a break of structure to consider here a high, a new higher low, or to consider here a new lower high, or to consider here a new lower high? Why are we supposed to wait for a break of structure to consider there a new lower high, or a new lower, sorry, a new higher low? Sorry, here is supposed to be a higher low. Wow. Here is supposed to be a higher low. Sorry, not a lower high. A higher low. So why do we wait for a break of structure? Somebody might be asking, why must you wait for a break of structure to consider here a lower high? Okay, why? Because market is tricky sometimes. Okay, let's use a new fresh page. Market can be very tricky. Markets can do something like this. We have our break of, sorry, let me go back a little bit. I have enough room to. Market can do something like this. We have a new high, a new low. Okay, we have our low now and our high, and breaks here. Okay, we now have our lower low and our lower high. Okay, now market can do something like this. All these things have been textbook example. Market can do something like this, as if it wants to break this low, but it will not break it. Now breaks this high, but did not break this our highest point. Okay, and just does something like before breaking this guy. Okay, now this is what you are going to be seeing, the real market structure you are going to be seeing. All the first ones you have been seeing, this is where market gets more complicated. Okay, and you'll be like, what is happening? Like, okay, so in a scenario like this is why we want to see a break of structure before we consider this guy a high, like before we consider any high here, but before we start indicating any high here, you need to see a break of structure, like a lower low being broken first before we consider any high here. Okay, now in this scenario, are we going to call this place a high, our lower high, or are we going to call this place our lower high? I just giving you a time to answer that question. Are we going to call this place our lower high, or are we going to be calling this place our lower high? Okay, I know you have answered the question on your own, so let me now validate your answer. No, we are not going to be calling here a lower high. If in your mind you are calling here a lower high, no, we are not going to be calling here a lower high. What you are looking at is the highest point market went to before breaking structure. Remember, let me bring our breakout structure here. Okay, market has broken structure. Okay. Let me make it a bit more. Okay, market has broken structure. You want to see the highest point market went to before breaking structure. The highest point market went to before breaking structure. This is not, if you look at this guy clearly, this is not the highest point. Here is not the highest point. Okay, this was the highest point. It went to before breaking structure. Remember, we already have our break of structure here. We already have a break of structure here. We already have a break of structure here, and we have our, okay, I had another break of structure here. Sorry, let me. I had another break of structure here. Okay. Now you know that you have our higher high. Okay, our high, lower high, low, lower low, lower low. Okay, now all these places are not meant to be broken. Okay, market, we want market to be protecting this place and be breaking these lows, protecting the high and be breaking the lows. Now this is our last higher, our last high. Okay, let me say our last high. So you want market to break here. Market has done it. Now what you want to see now before the next break of structure, which is during this pullback phase, now you don't want here is this, we have put back like this. Okay, we have put back like this and want to break this structure, but we did not break it. Okay, we did not break we did not break this low, which is going to be our new break of structure. But we did not break it. Market now put back again. Okay, I moved higher than this point. Okay, I moved higher than this previous point here before breaking this structure, before finally breaking this structure. So we have gotten our break of structure. So what you are going to be looking at is from this point now to where market broke structure, to that point where market broke structure, which is this point, not this point. So you are going to be looking at here from this low now. Where is the highest point market went to before breaking structure? That's what is not here, because market went here and it did not break this structure. So this was the highest point market went to before breaking structure, and this is where we are going to be focusing. So this is where we are going to call our lower. This is where we are going to be going our lower high. That's highest point market went to before breaking structure. Okay, same thing applies to sorry. Same thing applies to an uptrend. Okay, we just did for a downtrend. Same thing applies to an uptrend. Hi. Very good. Very good. So we have our break of structure here. Break of structure. This is our low and this is our high. This before we now created a lower. A lower high before breaking structure. Sorry, a lower low before breaking structure. Okay, so I'll be using just highs and lows so that you will not be confusing yourself. I'll just be saying high and low so that, but I know you understand what I'm saying. Okay, now if I'm to ask you, bro or sis, where is the lowest point market got to before breaking structure? Just let me leave you to it so that you answer the question to yourself before I validate your answer. Where is the highest point market went to before breaking structure? Where? Okay. market, after breaking this previous structure, created a high and started pulling back. Okay, we have a high here. Tried breaking structure, but it did not break structure. It's created another low. Tried breaking structure, it did not break structure, created another low. Now broke the structure. So where is the lowest point before breaking structure? This was the lowest point before breaking structure. Okay, let's give another example. Let's make it more realistic. Let's say we have something like this. We've created a high. Okay, now we now have something like this. Before breaking structure. Uh-huh. So in this scenario now, where do you think is going to be where do you think is going to be your low, your lower low? Where? In this scenario, we have, let me help you out here. We have our break of structure and we also have a break of structure. We have our low. So for this low now, for this low right here, for us to annotate our lower low. So where is the point you are going to mark out as our lower low? Where is the point you are going to mark out as our lower low here? Let me leave you to that. Okay, a lot of people might be saying this low, but you are wrong. This is not the high, this is not the lowest point before the break of structure. Okay, this is not the lowest point before the break of structure. This is the lowest point before the break of structure, and this is where we are going to be marking out as our lower low. Okay, this is the lowest point market got to before breaking structure. So all these things are not our business. What is our business is when during this pullback, where is the lowest point market pulled back to before breaking structure? That's what you want to focus on. Where is the lowest point market pulled back to before breaking structure? Okay, that's going to be it. So let's go into the chart. I don't think, if you have any confusions, just let me know. If you have any confusions, just let me know. Okay, let me help you out. So that's it. This is what you are going to be expecting. Remember, few takeaways. Okay, before we now do few examples and call it a day. Okay, few takeaways. We have two phases in the market. We have the continuation phase and the pullback phase. Continuation phase and the pullback phase for an uptrend. For a downtrend, um the pullback phase and the continuation, pullback, continuation. Okay, these are two things we are looking at. Now we have what you call a break of structure. Break of structure. So what is a break of structure? A break of structure is a break of a previous high or low in the market. A break of previous high or low in the market. So for an uptrend, we have a break of structure as a break of our previous high, and in the downtrend you have a break of structure as a break of our previous low. Okay, so another thing to take away, in an uptrend we want market to be breaking the highs and protecting the lows. Break the highs, protect the lows. Break the highs, protect the lows. Okay, break the highs and protect the lows. Then in a downtrend we want market to break the lows, protect the highs. Break the lows, protect the highs. Okay, break the lows, protect the highs. Okay, and okay, these are the few takeaways you are going to be taking away. And again, what we have again is we we have higher highs and uh higher lows, higher highs and higher lows, higher highs and higher lows in an uptrend. And in the downtrend we have lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Okay, these are the important takeaways you have to take away. And in a downtrend or in an uptrend, for us to confirm the high or a low in an uptrend and a downtrend, is going to be the lowest point before the break of structure. the lowest point before the break of structure, and in a downtrend is going to be the highest, sorry, it's going to be the highest point before the break of structure. The highest point before the break of structure is what we are going to be looking at. Okay, very simple, very simple. Okay, very simple. So let's go to the chart to see a few examples, and we call it a day. Hope you are learning something so far. Hope you have been learning something so far. Okay. Okay, so let's mark out our break of structures and a and our shit. Let's look for a trend and then mark out. Okay, let me go to 1 hour so that we have a lot of data to work with. Sharp. Now let's work with this uptrend we are seeing here. Okay, now we now have an uptrend here. Why do we call this an uptrend? Zoom out. Why do you call this an uptrend? Because we have, obviously you can see series of higher highs, higher lows, higher highs, higher lows, like higher highs, higher lows, higher highs, higher lows. Sorry. Okay. I made a mistake there. Higher highs, higher lows. Okay. Okay, so this is why we call this guy an uptrend. Okay, so we are going to look at this uptrend and mark out the structures and the break of structures, the high lows and all that. Okay, so if I'm done with this, I will give you an assignment. You go on your own and start marking out structures. Okay, and start marking out structures. So in our next class, in our next section, okay, I'll be talking about pullbacks and continuations and time frames. Okay, and time frames and a lot of things, so that you understand when a pullback is over and when when a pullback is over and when a continuation is about to happen, because it's in that continuation that's when you catch your trade, okay, and start trading. So it's going to be a lot of fun in the next session, so let's get to it. So this BTC USDT, okay, this is the pair we are looking at now. We had a break of structure here. Okay, we had a break of structure. Sorry, let me use this guy. We had a break of structure here. Let's change the color of that to black. Yes, black. Is black that obvious? Not obvious. Let's use green. No. Yellow. No. No, that's right. No. No. Let's use blue. In fact. Okay. Yes. Let's use blue. Okay. We had a break of structure there. That means when we had that break of structure, that means we now have a high. A high. Okay. When market broke this structure, we now confirmed here a high, and we now have what? A low. Low. Okay, sharp. So we are now anticipating an uptrend because market has done what? Has break a high. Okay, let's identify this our BO S, our break of structure. Sharp. Now we now have what? A high and a low. So and we now have our break of structure. So what we don't want is for markets to do what? To break this low. Okay, we want market to protect the low and take out the high. So this is our first sign that market is about to start trending to the upside. Okay, we have our low and our high, so we are going to mark out where we want market to protect for us. So we don't want market to break this low. Okay, if market breaks this low, that means our uptrend is no more valid. Okay, we now start looking out for other things, but that is going to be in our next session. But we now focus, let's just focus on the marking out of the market structure. Okay, so now we now have our highs and our lows. So what are we expecting when after market pulled back like this? What are we expecting? And started okay, when markets pull back and started continuing to the upside, what are we expecting? A break of structure. So are you seeing that stuff I told you guys when we are doing our demo this thing, when I was showing you guys an example? Are you seeing markets created a low here, but it did not take out this high, came again, went to the downside before breaking structure? I seen it. So this where is going to be our lowest point here? Is going to be this guy. Okay, and this guy is going to be our lower low. Okay, yes, then bottom, yeah. Okay, so that guy is going to be our what? Our lower low. Okay, our lower low. And when we broke this structure, so sorry, it's going to be our lower low. Why? Because it has broken structure, right? Yes, because it has broken structure. So we now have our we now copy this guy, break of structure. So we have gotten our break of structure. So we are going to identify this high here as our what? As our higher high. Okay, remember. So that place now our higher high. Let's take this thing out. We have seen our higher high. So what are we anticipating now? A pullback. And we have gotten our pullback. After a pullback, what are you going to expect? Continuation. So when are we going to identify here as our low? Because market can also do something like this, come down here, but we don't want market to break this low. Okay, because we are in an uptrend, so our lows are going to be protected. Okay, so market can do something like this and break structure. So that's why we need a break of structure to confirm a low, our lower low. Okay, so we now have, so we first of all have break of structure, our break of structure. So once markets broke structure, what are we going to look at for? Our low, our lowest point before the break of structure. Okay, and here is our lowest point before the break of structure. So we now have our lower low. Okay, come on, I see how simple it is. We are now marking out our market structure. So we have, after this lowest point, we have a new high. We had a new high here, a new high, which is now our higher high. Okay, our higher high. So after this break of structure, we had our new high here. Okay. we now have a new higher high. Okay, we have a new higher high there, and we had a new what break of structure. Had a new break of structure, which is here. Have a new break of structure, and we had a new lower lower low. Why? Because there was the lowest point before the break of structure. Here was the lowest point before the break of structure, but something tricky happened there. Market broke structure again, but this time to the downside. Okay, market broke structure again. Market broke that lowest point, had a break of structure, but this time we had, when we start looking into more details, we have confirmed, like we need some things in place before we confirm an uptrend or a downtrend. Okay, we are just marking our basic market structure, but before we confirm an uptrend, market must break two lows. So before you confirm a downtrend, market must break two lows before you confirm a downtrend. So since market did not break two lows here, we are still in an uptrend, and now we had a new break of structure. We have a new break of structure. This is more advanced, but we are going to still look into that. But let's just focus on the basic stuff. But just know that before you confirm a downtrend, markets have to break two lows. Two lows, yes. It just broke one low, one lower low, and here was still protected. So here is no more our lower low. Why? Because market broke this guy and broke another new structure to the upside. So here is no more our new lower low. Okay, here is no more our new lower low, and here is no more our new higher high, and here is no more our new break of structure. Our new break of structure is this high. Let's do this guy. Our new break of structure is here. This is our break of structure, not this guy. And our new high is here. Okay, not this high again, because here is higher than all these points. Okay, here is higher than all these points, our high, and here is no more our lower low. Here is now our new lower low. Very simple. Okay, it looks confusing, but the more you practice, the more you understand better. Okay, we now, the same thing happened here. This same thing that happened there. So we are not going to consider same thing happened here. We are not going to consider here as our lower low. Oh, okay. So you had a new break of structure. You have our higher high, a new high, and a new break of structure. A new high. Okay. So when we had that new high, where is our lowest point? If you look at this place, this thing looks very confusing. But what are you going to focus? What are we focusing on? This is the high, and where is the lowest point? Here is not the lowest point before this break of structure. Here is the lowest point, not here. Here is not the lowest point, because here is very lower, is lower than this place. Here is not the lowest point. Here is not the lowest point. Here is the lowest point before the break of structure. Okay, so what we are going to be focusing on is that low and that break of structure. Okay, so all these things are just what they call is what you call internal market structure. So we are going to be getting into that in our next section. Okay, so let's just delete here. Okay, let's first of all mark out that lowest point, which is here, then delete this guy. Okay, are you seeing it? So what are you noticing here? What are you noticing in this uptrend? What has market been doing? Market has been taking out the higher highs, and protecting the lower lows. Are you seeing? The lower lows are not broken. All of them are intact, but their market is just breaking the highs. This is what tells you that you are in an uptrend. Okay, very simple. So this is what you are going to be doing until market changes this this structure now from like until market changing this trend and start doing another thing, which is did here. Market broke structure here. And what can you see? What can you see here? Market broke two lows. This was our first low, and this was our second low. So it broke two lows, and ever since when it did that, what have you been seeing? Markets changed trend and started breaking structures to the downside. And started breaking structures to the downside. After this break structure, and started breaking structures to the downside. Are you seeing? And since it started doing that, the highs were protected. Protected, and it was taking out the lows. Are you seeing? That's what market does all the time. All the time. All the time. Okay, so I want you guys to go back and start practicing for an uptrend, okay, and also for a downtrend. Okay, so in our next section we look into more details of when a pullback is over, how to know a valid like when a trend is still valid and when a trend is no more valid, and how to check multiple time frame analysis and all that. We are going to be talking a lot of things in our next section. So guys, that will be all for today. Just go into your chart and start practicing this swing, these highs and lows, break of structure and all of that. Okay, so that will be all for today. Have a nice day. Okay.